gente, me escuché en el video, and today I am bringing you one of the most important videos I think you'll watch this whole year, and it is what is tokenization. It is basically a breakdown from Ondo Finance Ian the Bode as he talks about what is tokenization and how Ondo Finance is helping that bring it to life. Also, at the end of the video, we are going to be going over the White House kind of like crypto report and some specific stuff about tokenization. So stay tuned until the end of the video. Please remember to leave a like, comment, and subscribe. Without further ado, let's get right into it.
Tokenization allows financial products to run on blockchain rails to enable global access, 24/7 mobility, and programmability in very different ways that were previously not possible.
So let's start with basics then. What is tokenization and how does tokenization work?
Tokenization is it's a fancy term, but it's a pretty straightforward process. It's essentially just the process of issuing a digital representation of a traditional asset on blockchain rails in the form of a token. The best known example of a tokenized asset at this point is a stablecoin, which is essentially just tokenized cash, right? You take cash in the real world, you put it into a bank account or a custodian, you make sure that it is immobilized, and then you issue a token on blockchain rails that represents or is backed by that cash in the custodian and is always redeemable for $1. That is a good example of tokenizing a real world asset.
Excellent. So that was a great example, actually. Stable coins are tokenized assets on a blockchain. Can you give us some more real world examples of tokenization?
So those stable coins that you just saw was USDT and USDC, some of the biggest stable coins out there
that exists today.
Totally. So the process that I described on how it can work for cash, you can kind of replicate that for other asset classes too. The exact process may differ a little bit, but the concept stays the same. So it is very easy to think of taking any type of traditional asset, place it in a reserve or a custodian, make sure that it can't move, so effectively immobilize it, and then issue a token against those reserves on blockchain rails. You can replicate that process for treasuries, for public equities, for private equities, for real estate, even more esoteric things like art and fine liquor.
So what does it actually mean to bring treasuries on chain? What's the unique proposition that it offers once an asset or a treasury is offered on chain? What are the benefits and novelties of this technology?
So number one benefit is global access. So once you have issued a token on blockchain rails, it can essentially do a few things. It can move freely to a global audience. This depends a little bit on how you structure it. Take the example of a stablecoin. One of the key benefits is that it can move freely on blockchain rails to a global audience 24/7, right? That clearly is quite important because it opens up global access to the asset. There's a lot of people globally who historically had struggled to get access to the US dollar, but now in the form of a stablecoin, that's pretty easy. The second benefit is really that it enables 24/7 movement of the asset, right? When you have a traditional financial asset, the example of cash, it can move on TradFi rails, but definitely not 24/7, particularly not on a global basis. Often, TradFi infrastructure only moves assets 9 to 5, sometimes if you're lucky 24/5, but very rarely 24/7. When you tokenize something, because you've immobilized it and you've represented it on blockchain rails operate 24/7, every single transaction settles atomically, so you've essentially enabled capital mobility in a much more seamless fashion. And then last but not least, when you tokenize an asset, you also make it programmable. This essentially means that an asset on blockchain rails can engage and interact with a smart contract. Smart contract is just a fancy term for an application that runs on blockchain rails. It can essentially do things that are pre-programmed 24/7 without human intervention. In the form of stablecoins, this is particularly relevant for liquidity provisioning in DeFi, but it's very easy to understand how other financial primitives like margin can easily be facilitated 24/7 in the form of a smart contract. When you commit a specific asset to a smart contract, it is then allowed to give you liquidity at a certain loan to value ratio in return. In TradFi rails and at TradFi companies, that requires human interventions, etc. In the smart contract DeFi world, that can happen 24/7. But in order to tap into that 24/7 DeFi ecosystem, you need to have an asset that is tokenized that can actually engage with these smart contracts.
Fantastic.
So I think that kind of sums it up pretty nicely. So basically, everyone in the near future, I mean, there's people that are doing it now, basically going to be able to access the United States and stocks in general here in the United States, not just stocks, ETFs, whatever it may be, globally for people that previously did not have access to it. And you're going to be able to use it 24/7, as well as the added, benefits of going into like DeFi pools and et cetera, et cetera. So I think that's pretty amazing.
Explanation. Thank you so much for that. So what are the main risks associated with tokenization?
Tokenization obviously does not come without risks, right? So first and foremost, when you hold an asset on chain, a token on chain, you want to make sure that the asset that you hold is actually backed by the real world asset at a custodian account. This may seem pretty straightforward and obvious, but there have been plenty of examples and instances historically where people have tokenized an asset, but the on-chain asset was in fact not backed. It was just a derivative contract or synthetic exposure. There are instances in which that can work, but it is typically much more comfortable as an investor that when you hold an asset on-chain, it is actually backed by the underlying, and you want to make sure that there are sufficient disclosures about the reserves so that you can actually verify that the backing is there at a regulated custodian. Otherwise, the issuer counterparty risk you have is pretty significant. The second risk is, I think, one of just investor protections. When you hold a token on chain, it doesn't always give you legal rights to the underlying asset or legal rights to redeem the token against the underlying asset or the cash value. In fact, most stablecoins issued today in fact, do not give you necessarily a legal right to the underlying. They give you a claim against the issuer. That is a very different investor protection treatment. I think when you hold a tokenized asset, you just always want to make sure that what you hold on chain gives you sufficient investor protections so that when you hold the token, it's as good as or close to holding the underlying as possible. We have spent a lot of time crafting investor protections on chain. We feel pretty good that our tokens carry best-in-class investor protections. Our tokens are issued as a debt instrument, for example, to give people a senior secured claim against the underlying. But these are all things that you as an investor need to look at to make sure that when you hold a token on chain, it's actually almost as good as holding the underlying.
I'd love to have an overview briefly of how Ondo contributes to tokenization.
I think Ondo has a track record of meaningful product innovation in the tokenization space. We were the first ones to issue a tokenized Treasury fund that was actually peer-to-peer transferable on-chain and could even be used in DeFi protocols as collateral. That was, at the time, a very meaningful innovation. The product is called OUSG. I believe we may talk about it a little later. But at the time, that was pretty revolutionary. That same product structure was later copied by, Bode, the BlackRock tokenized Treasury fund. But Ondo was the first one to, issue a product with that particular structure. We then also issued a second product. That one is called USDY. That one is, again, another meaningful innovation in the fact that it's a quasi-permissionless version of a tokenized treasury fund that resembles a stablecoin quite a bit, but it pays out yield and it has better investor protections, as previously highlighted. So we've got a pretty good track record of issuing tokenized assets in a novel way, in a way that protects investors, in a way that assets can pay out yield. That works still in DeFi, and we're about to launch our Ondo Global Markets platform for tokenized stocks and ETFs. That is going to be another meaningful innovation into the space.
So yeah, definitely go check out the full interview. I haven't found it, but when I find it, I'll obviously leave it in the description down below. But let's get right into it. So this is basically, let me see. So this is the Strengthening American Leadership in Digital Financial Technologies, basically the crypto white paper that the White House laid out yesterday. And in page 40, it says tokenization. What I want to make mention here that's really important is that industry estimates suggest that over $600 billion in real world assets could be tokenized by 2030. So we've seen here the tremendous growth from basically nothing in October 2021 to where it is now, it's right now about $20 billion. So I don't know how many X's that is, but that's a lot of X's, and that's excluding stable coins. And last but not least, they have a little, let me just put it a little bit bigger. So we see here Ondo is basically at the forefront of this whole technology. So traditional assets, like they mentioned, is only available 9 to 5 during weekdays and not on holidays too. So this is stocks, fixed incomes, commodities, real estate, alternative assets. Ondo, as the issuer, has the price fees, smart contracts, assets in custody, third-party oversight, and then they got offered tokenized financial assets that are able to move 24/7. And this, sell globally, and it is self-custody. So basically, it means that you hold it, in your own wallet. So what do you think? Hopefully you enjoyed the video. It's really, really insightful, and this is truly, truly, truly the future. Everyone is moving to tokenized assets sometime soon. So hopefully we'll soon be able to, not just transact on chain and have all these different stuff in chains, but be able to, stay on chain, right? Because a lot of people, buy on chain and then off ramp. But now with this whole thing, we're going to be able to stay on chain and transact on chain and be able to move on chain. So I think it's really, really hopeful for the future of the financial system, not just here in the United States, but all over the world. Anyways, intrigue your thoughts. Please let me know what you think about the video. And as always, please remember to leave a like, comment, and subscribe. And I will see you on the next one. Bye-bye.